Hi, I'm Nancy Ackerman, real estate broker with iPro Realty, and I'm here today with Joe Sammut of Mortgage Architect. So we have a few questions to go through today, Joe, just to enlighten people on mortgages and mortgage brokers. So we'll get right into it.
Perfect.
And actually, first, Joe, tell us a little bit about yourself.
Oh boy, I've been in the business 28 years and one of the founders of Mortgage Architects. We started the company 16 years ago and we built it into a national brand. We're coast to coast to coast. We do a lot of mortgage volume. We deal with first-time home buyers, multiple homeowners, property investors, things like that. So we're quite proficient in the mortgage industry, and we have some great people on our staff that are here to take care of clients.
Awesome. Okay, so the first question, we're going to dive right into it, is
Perfect.
the home buying process. It can be stressful, it can be emotional, and it can also be a learning curve for some, and especially those who are new to buying a home or those who haven't done it in a while. So what are some suggestions that you have for people to come into you to be prepared?
Perfect, great question. The home buying process is very daunting, especially now with the interest rates being where they are and the news media being all filled with doom and gloom. So anybody that's interested in looking at the home buying process should most certainly sit down with somebody to find out exactly what their position to be able to do. So what do they qualify for? What options are available to them in the marketplace? What does it mean to be a conventional borrower compared to a high ratio borrower? Just basic fundamentals of mortgages, and basically needing somebody that can help you weed through the bank jargon, because there's a lot of misinformation, there's a lot of just misguided people out in the industry right now giving people some bad advice. So the key thing is just to ask a lot of questions and make sure that somebody is able to address all of your concerns.
Great. So for the young adults, or even not even young adults, anybody, what's the best way to improve your credit score, and why is it important?
I love your questions. So credit scores are very important because it's essentially your credit signature. It's going to go with you wherever you go, and it's going to be the reason you get credit or the reason you can't get credit, the reason you can get a mortgage, not get a mortgage, rent an apartment, not be able to rent an apartment. Your credit is everything about you. It tells us a snapshot view of everything that you've done with your credit over the last 7 years. So the key thing is get in touch with the two main credit bureau agencies in Canada, one being Equifax Canada, the other is called TransUnion, and ask to pull your own personal inquiry and find out what's on your credit bureau to make sure that it's in fact your credit, make sure that it's being rated properly, the amounts that are owed are accurate rather than somebody putting credit in your name that you didn't know about. So first and foremost, make sure that you get a good handle on what your credit bureau looks like, and ask the person that you're speaking to if they can comment on your score and your credit rating history. Once you've done that, one of the things we just talked about this week actually was to put a narrative on your credit bureau that basically it's a fraud warning or a fraud alert, so that way anybody that's going to try to steal or intrude on your credit has to call you to verify that that you in fact have applied for credit. So make sure that you put a fraud warning on it, so that way your credit is protected. But the key thing is make sure your bills are paid, borrow less money if you can avoid it, and making the minimum payment is okay, but make sure you're making large lump sum payments on any revolving debt that you have so you can keep lower balances and your credit report or credit rating will go up.
Awesome. Great. Thanks. So what are the benefits of going to a mortgage broker over going to a bank?
Okay. This is the question we get asked all the time. The main difference would be that we're not a single source lender. Banks are going to be able to offer you their own products. So TD Bank can offer TD products, Scotiabank products. As a broker, we have a vast array of different lenders that we deal with, including chartered banks, and we're able to give you a option or options available to you as far as a mortgage product or mortgage products that are going to help suit what you're looking for. Generally speaking, we don't charge fees. So if you have a client, or if you're a client that is an A client, an A borrower that can basically walk into a bank, come to us, walk in through us, we get you preferred rates and terms, and there's no cost for our service. And really the beautiful thing about what we do is we educate people throughout the process, because this is all we do. We just do mortgages. We don't do lines of credit or credit cards. So we're experts in the mortgage field, and we can give you the right advice and guidance.
Perfect. Okay. And the burning question, fixed rate or variable rate?
Okay.
What are the pros and cons?
Good question, and it all comes down to somebody's credit worthiness and what their risk for, or their appetite for risk is. If you take a look at where interest rates are today, the variable rate mortgage is not as attractive as perhaps it has been over recent years. So fixed rates are more of an appealing feature for some people. But there are a lot of people that like the variable because they can ride the fluctuating rates on the uptick, and they can also ride it as it comes back down with the hopes that it is going to come back down. But really it comes down to your affordability and what you need to help you sleep at night. So for example, we have 5-year rates right now as low as 4.8 for a fixed 5-year term, and we have variable, which would be in the 6.4 range. So you can see that there's a huge delta between the two terms, and that difference alone is enough to steer people toward the fixed rates at this particular time, when historically people were leaning toward variable because they looked like they could do better than the fixed.
Right.
So it really comes down to your appetite, your risk tolerances, and at the end of the day, what you think you can afford on a monthly basis.
What about penalties?
That's a really good question, because the variable rate mortgage is only ever subject to a 3-month interest penalty, whereas a fixed mortgage is subject to an interest rate differential or a 3-month interest penalty, whichever is greater. And in some cases, with the charter banks especially, you'll find that those interest rate differential penalties are significantly larger than they would have been on a variable rate mortgage.
Great, thanks.
Yeah.
So when it comes to looking for a mortgage or having mortgage questions, always ask a mortgage professional like Joe, and I'm sure Joe would be happy to take your calls at
Love to.
Mortgage Architect.
Thank you.
Thank you.